like the why for me with AI is a couple of really basic things. One, computers can just handle more data, make more sophisticated decisions.
Mhm.
And then it also can remove biases.
So, Patti, really enjoyed having Jeff Shea on today from Under.io. He's always just a really insightful kind of, not a futurist, but kind of he always sees what's coming around the
Well,
corner.
yeah,
So it's interesting.
and he's definitely more into the undergirding technologies and processes that keep this business really going. I've
Yeah,
always appreciated our discussions with him because I learned something every day, and this time I learned a little bit about underwriting that I didn't know before. So
yeah,
that was
absolutely.
very helpful.
If you're looking to streamline that, you're going to enjoy that conversation. And then I talk about a merchant, a restaurant owner that I talked to today. I was actually out in the field today and had a meeting with a restaurant owner selling them a point of sale system. Find out if I close the deal tomorrow, but or I guess today is Friday, so I guess Monday. But send a proposal over. But I think we'll get that deal. But I talked about dual pricing.
Right.
And their view of that as somebody that owns 2 different restaurant locations. So
And
that's
has
what I
been
talk about.
kind of going at pricing from 2 different ways.
Yes,
Yes.
exactly. Yep. And then Patti, tell us about the insiders.
Talking about, the feds coming down on big tech, and in particular, lack of competition in the mobile payments arena.
Yeah, so we talk about Apple Pay and even broadly too, we talk about some of these trends and how they affect the ISOs and their share of the pie. So Jeff Shea, as well as Under.io, they're not paid sponsors, they don't do advertising, no consulting, never done anything like that with them. This is just a great guy and somebody in the industry we respect. So with that in mind, let's dive into this interview. Hey everybody, Patti and I are here today with Jeff Shea, who's the CEO at Under.io. How you doing today, Jeff?
Doing great. Thanks for having me on.
Of course. Yeah. So we had you on a little while back and we're talking about onboarding merchant accounts and some of the things you're doing at Under.io. But for those that maybe missed that episode, can you give us a little bit of your background? How did you get into this crazy business? And what led you to founding Under.io?
Yeah, thank you for that. So I've been in payments now, I think about 12 years.
Cool.
It's funny, when I got started, I was
middle-aged.
I was not from the industry, but I'm starting to get to that mature state. So
right, that's right.
came into payments, kind of fell in love with it. We eventually were a wholesale ISO and a payment facilitator. And we were at the really early days of kind of this transition of what I consider like the legacy payments to the more modern payments that we're seeing today. And I think, when we were in the space, we really saw this transition, and these business model changes are driving merchants to expect a digital experience today. We found it was really expensive for us to start to upgrade, our technology or vendor technology, and saw more of these rise in fintechs like Stripe and Square and Adyen and all of that stuff. So that after leaving the payment side of the books, that really kind of forced us to want to do something about this and really kind of give back to the space that we came from. So I developed we help financial services companies to onboard more customers across more channels by leveraging our no-code software platform. And it really does a couple of things. It allows our customers to quickly and inexpensively implement a new front end without engineers, without having to upgrade old technology. They can now provide digital first solutions to their customers, and they can compete with the rise of technology in the space.
Awesome. Yeah, I love it. So, I thought would be great is as we dive into this, Jeff, maybe you can give us some insights here when we talk about the current state of underwriting, which we're talking about underwriting and AI today. When we think about kind of legacy underwriting, I guess we'll call it, but it's really not legacy yet. It's kind of what everybody still does. It should be legacy, but underwriting today from the ISO all the way up to the acquiring banks and everything. How do you see the current system, and what are the challenges that are currently facing the industry when it comes to like onboarding merchants?
So underwriting is always top of mind in every industry in financial services,
Sure.
right? And it feels like fraud is always on the rise. So it's only a more important question every year that goes by. I think the other parallel is that the sophistication of fraud is always on the rise,
Yeah.
not just the quantity of fraud. And in my experience, underwriting has always been additive. So what I mean by that is someone creates an underwriting policy based on analysis of the work that they're going into, right? And then something new happens. There's a new way that people are creating losses. There's a new fraud of some sort that comes across. So then there's a component that's put in place to solve for this one new thing that's added on top of the underwriting policy. And then 6 months later, a year later, something else happens. There's a new way that people are starting to be attacked or starting to lose money. So then there's something else added. And really over the last 10 or 20 years, it just feels like this additive process of like a foundational policy with we'll cover this and we'll cover this. And what that does is it just creates more time and money into the process. There's more people involved. There's more systems that they're checking. It may take longer. There's probably more requirements on the merchant, which creates a worse user experience. And like, to me, that's the enigma around underwriting that's constantly gotten worse. And we, until recently, haven't really seen ways of improving that process other than just layering one more thing on top.
And so, with that in mind, I mean, big picture, how do you see AI, solving these problems? If you can kind of explain to our audience a little bit more of the practical implications of how AI can be leveraged in that way.
Yeah, so maybe to start, like, how does AI work, right? Because this is new, and I don't think everyone really has a full grasp of how this works yet, except maybe ChatGPT, right? So AI basically combines large data sets with algorithms, right? And then it manipulates the algorithms by learning the behavior patterns that are within this data, right? And that's ultimately like the foundation of how you can think of it. And it's interesting, McKinsey reported that manual underwriting in insurance is going to be obsolete by 2030. Which is not that far away. That's 7 years from now. And I think it's a lot of this, transition that we've started to see. So, if we think of like AI with risk and underwriting, where I think there's an opportunity here is that processors and wholesale ISOs and payment facilitators, et cetera, they have an enormous amount of data. And if you look at the cohort of losses as an example, you take like, here's all the merchants that I or we or this like collaborative group have lost money on for different reasons, right? With AI, what you can do is you can organize all that data, specifically within this cohort. You could dump it into an algorithm and start to learn behaviors, and ideally start to like identify in advance like what account is either going to create a loss, or what are the parameters that would take an account that's not going to create a loss and eventually transition it into an account that now at this point there's a higher risk of loss. So it's really leveraging that data set which exists and then just updating the algorithms to help create a model that is a different way of approaching it from what I talked about before, which is like, here's one more plug and one more plug that you just kind of stack on top of that.
Right. So what is Under doing to leverage this, and provide new solutions?
Yeah, I mean, so when it comes
or improve solutions, I guess it's both, right?
Yeah, when it comes to AI, there's really two different ways that we look at it, right? So we're interested in the learned language models to transform our front end experience, right? And I think that's the other transition that we're already seeing and going to see more and more, right? So, if you think of what we do, right? So with Under, our software allows users to come in and create digital applications. So if you want to have an apply now button on your website, or you want to issue credit cards, or you want to offer payment accounts or loans, you can very easily create digital forms. You then can connect that to the related processor application or the compliance documents that you have, and you can automate your identity management with that too, right? So when we think of using AI in our front end, it's kind of transitioning away from the like log into a portal, do these steps, click these buttons, build these things, and instead come in and say, hey, I'm a payments company. I'd like to add an apply now button to issue credit cards on my website, right? And they type that in, and then that goes through our system and actually does the mechanics of creating that process. So that's a little bit of how I just think front ends in general are changing with SaaS. And we've seen that today with ChatGPT. I think people are using this a lot in content. A lot of companies are writing their blogs through these solutions instead of the process of that. And then the other area is what we've been talking about with it, which is underwriting and risk, right? So what we do today is really kind of try to leverage data, right? So specifically, if we think of just like our KYC workflow, most companies just run one check. They'll do a LexisNexis check or something like that, and they'll get a response back and then make a decision. We try to leverage as much as we can. So we're running a 5-point check on our KYC, including multi-factor authentication, using services like Ekata, Iovation, Idology, ID Analytics, LexisNexis, Twilio, and we're taking the data from all these different services, running them through an algorithm, and then also helping to come back with predictable responses like this account should be approved, this should be declined, this should be reviewed, and then here's all the data on why that should happen,
supporting it, right?
And really why, right? I think like the why for me with AI is a couple of really basic things. One, computers can just handle more data, right? So we've now added 4, 5, 6 different checks to an underwriter. They've got to look at multiple reports, try to combine the data together. It might make it more overwhelming or more expensive to kind of go in that pattern, but a computer can obviously take in more data, make more sophisticated decisions. And then it also can remove biases. And there's an interesting study about AI in the judicial courts on how it could potentially create better sentence guidelines for courts. And it's for these same 2 reasons, right? It can take more data and it can move the bias that a judge may put on this, like how polite was the person when they were up for sentencing? What are they wearing? Did you know this person? This feeling of I know better. And I think that that's so rampant in underwriting. An underwriter may have come from a certain industry and therefore have already a bias for an account that they're approving, or maybe the business they're in just lost money from a certain space, so they're now particularly avoiding that, right. Or maybe they don't like the way that the business is structured, but there are all these like personal biases that it may not actually influence in a positive way the outcome. So to me, it's like using AI to use more data, to handle it mathematically, and then to make a logical decision instead of always having it be a human-based decision.
Right. So what about if we zoom out and look at merchant onboarding in general? What should ISOs be doing, in order to be more competitive with these big PayFacs like Stripe and Adyen and Square? I mean, it seems to me that this is a logical way that they can.
Yeah, so I would almost go back to the basics. I mean, I think step 1 is to get online. That's almost a Web 2.0.
Well, that's like, right. That's like English 101. You have to know how to write the words.
But it's
one would think they already do.
Yeah, but a lot of them, I mean, it's amazing, Jeff, when I look at the web presence of a lot of the smaller ISOs today. And I mean, it basically is they might have a 1-page Wix site or something, but I mean, there's no interaction, there's no sign up, there's no anything like that, right?
Yeah, I mean, I think that's step 1. Get online, get a website. You can get that very inexpensively now. Find a way that you can communicate and talk with your customers online instead of having to just like meet them in person or do something over the phone. The other thing is I would really think about empowering your distribution channel, right? So still one of the strengths of the ISO market is the relationship that they have with their customers. That's been a strength. And I think one of the reasons that it's still thriving today, kind of against odds from what we've been hearing over the last few years, but them and their distribution channels have relationships with their customers, but they're often the least technically capable. Right. So if you have ways that you can give tools to your distribution, your agents, your ISVs, your downline channels to help them create a better experience when they're onboarding their customers, that's going to be paramount. And I think that goes hand in hand with getting online. And then the last piece we've seen a lot is to think about verticalization. It feels like those that are really the best at something can succeed more than being a generalist. And it's difficult to be a generalist now in the payment space. Yet we've seen a lot of ISOs really do amazing things as they start to become the best at something.
Yeah, and it's so interesting to me, right? Because it's like, Jeff, if you go back, say, when you got in the industry 12 years ago, which is about the same time I did, right? I was a specialist at payment processing, which meant I knew how to read a credit card processing statement and I knew how to set up a Nareit terminal, right? And that made me an expert because, so I could sell any business I wanted. pretty much in rural Pennsylvania here, that's what payment processing meant 12 years ago,
Right.
But then I think the issue is today it means something very different. It means point of sale, it means integrated payments, it means, specialized underwriting potentially, it means all these other things. And so there's this additional complexity to where now you can't claim, to say I'm a payments expert. I don't even know what that means anymore. Like
Right.
that's, I don't know, that's like saying we're a restaurant.
I know how to pay my bills.
Right.
Yeah,
Pay, right?
sure.
Payments.
Yeah. If a business owner came to me and I said, what kind of business do you guys have? And they said, well, I own a restaurant. I'd say, well, what, you like a Mexican restaurant? You mean a quick serve, a cafe, a fine dining establishment? You have a food truck? Like, what do you mean? I think
Right.
in the same way, it's like, you can't say, well, I sell payment processing. Well, what do you mean? You sell B2B and you do optimization, you sell card not present merchants on e-commerce solutions. Like what, you know what I mean? So I don't know, Jeff, what are your thoughts on that? Do you see the verticalization and the complexity? How is that feeding into these trends?
Yeah, well, I mean, I think it's a key part of finding a way to create a better experience for your customer. Because at the end of the day, the way that most businesses succeed is that they give a valuable product to their customer. And the way that they beat their competitors is that they have something that's more in need that better solves their problems.
Hmm.
So if you think of payments in this legacy fashion as somewhat of a utility, we can give everyone payments just like everyone can give everyone payments. You don't have a way of really standing out. And there's some amazing things out there today. I mean, the
Yeah.
products that Stripe has built and Square and just so many of the POSs that you've talked about, et cetera, are
Mm,
bringing real value. You go to a fast casual restaurant or a bike shop or somewhere, and they're using a tablet with a software that actually solves their business. It just
mhm.
happens to come with payments
Right.
instead of taking payments because they have to take payments. So there's a lot of different ways to verticalize. It doesn't have to be technology. It could be within a certain cohort, really understanding like those pain points and then figuring out how your solution can just create a better business experience for them. And I feel like that, that's something that any ISO today can do and should do and will set them ahead.
Mm. What are you seeing with your connections right now? Are you seeing ISOs making this transition? In other words, are you seeing those ISOs that like they were the generalists and they have maybe even the sales team that's going
Mhm.
out and they're shifting gears and they're becoming those vertical specialists or solution specialists? I know we're way off course here and just zooming out, but I'm just curious, like, what do you have any thoughts from your connections, what you're seeing in your own experience of, that can seem very daunting to make that shift. Any tips or thoughts on how to actually begin to make that shift? What are the steps that they need to take?
Yeah, without a doubt. I mean, I have been impressed. There's been a handful of companies that have done this quite well, right? And if you're a reader and you follow some of their blogs or LinkedIn posts, you'll even see it as something that they talk about a lot. I've seen a lot of context from ISOs talking about how the evolution of their sales process, right? From the early days, lots of agents,
Right.
to the middle days, everybody had a call center, to the new days, they've got a much more customized, higher level sales team, probably a much smaller sales team. And this is
Right.
this is all related to like what the business is doing. So I think
Yeah.
some companies have done a really great job with this. This is what
Yeah.
we tried to do. We transitioned from being a generalist into a payment facilitation platform. We focused on vertically integrated software and marketplaces back in 2015. And that was our way of doing it. And I have seen that across the trends. Another way to
Yeah.
do that for a smaller group is to just find the right group to partner with. So this might be
Yeah.
switching your general agent agreement from, a key processor over to one of the larger group that is really starting to do that. And that way, without the time or resources, you can make that
Mm.
transition. But again, at the end of the day, like the steps to do that, if that's the process that you go, I think is really easy. It's like figure out a business that has some real pain and
Mm.
figure out how you can make that pain less than it is today, right?
Mm.
And focus all of your engineering and your acumen and the way that you approach the market in doing that. And ideally it's not a payments pain, right? You're solving a pain within the core business that the business
Right.
cares about more, and
Mm.
then you're obviously leveraging financial services to do that.
I love it. Hey, so before we finish up today, I thought it'd be cool to kind of dig in just a little bit more on Under.io, if you don't mind, because I really want to make sure I love what you're doing, Jeff, and I want to make sure our audience like truly understands, what this means. So let's go for like an ISO. So there, I've got it. Let's say I've got an ISO. I've got, we're doing 50 mids a month, and we're currently with, let's say TSYS, right? It's a real common platform. So why and how would I partner with Under.io?
Sure. So first of all, just to be clear, Under is not a processor. We don't do payments. We're a software company. We're agnostic. So it doesn't matter who you work with, what processor, what super ISO, what agents, what payment facilitator, or even if you're not in payments, we work with people that issue credit cards, loans, insurance, things like that. So you would first kind of take a step of like, are you interested in creating a better way of onboarding customers in my business? Are you interested in modernizing your website? Are you interested in coming up with digital solutions that you can offer? And that's like the first step of working with us. The types of things that we do, as I mentioned, is our platform is no code, meaning you don't need an engineer to use it. You could think of it similar to like the level of expertise you would need to use HubSpot or Salesforce or something of that nature. Users come into our platform. The first step is they're probably going to create their first digital form. This might be a pre-application that you put on your website. This might just be a contact us page. Go to my website, enter some information, an easy way to start collecting data. It's mobile optimized. It can be incredibly sophisticated, or it can be really simple. From there, our customers will often then start to create experiences and workflows. So one might be, I want to create an automated application for my TSYS application. So they can use our platform to start to connect those missing pieces, add the PDF, add electronic signatures. These are the supporting documents we need. Let's clean up the questions that we ask. And our product allows them to kind of connect that. And most of our customers have lots of workflows. They might have a pre-application, a contact us page, a certain ISV form for one of their ISVs. They'll have a TSYS app, maybe a high-risk app, and the series goes on. They may also leverage us to very quickly and easily start to offer merchant cash advance or issue credit cards because it's all within the same ecosystem. And then for the groups we work with that bear liability, they'll often leverage our identity suite. So we will help them to automate their KYCs, KYBs, credit checks, bank verifications, and pull all that data into the process so that they can either use it as a pre-qualification or even the early stages as they're thinking about underwriting with what they do.
Love it. Great. Well, thanks for sharing that. Jeff, I always love having you on. I think you're somebody who's kind of keeping an eye on the cutting edge trends, and with your payments background, it brings a lot of really cool kind of insight and context to it. So for those that are in our audience, they love what you're talking about. They want to learn more about working with Under.io to handle the underwriting and build the forms out and all of that. Where would you send them to learn more?
Yeah, two places. Our website, Under.io, UNDER.io. And we're pretty active on LinkedIn. So anyone wants to take a look, we've got a lot of good information on there as well. And same to you, James. Always a pleasure to be on the show. Appreciate everything that you guys are doing out there.
Awesome. Jeff, thanks so much for joining us today. Hope you have a great day. So Patti took a couple people from my team recently to a really cool resort, and we were doing some planning and things. And guess what we used all day at the restaurants and at the resort?
Your Nativia debit card?
You got it. So we used our Nativia debit card. We got our cash back. But here's what's really cool. I am actually the agent of my own account, right?
That's fun. That's
so
fun.
I'm the agent that sold the account. And so not only am I going to get cash back on this, but guess what? I'm going to get from my own account.
Cash for your, yes.
Yeah, I'm getting my residual income. So if you're not familiar with how banking services produce residual income, just like merchant services,
just like it, yes,
you need to learn more about our sponsor. Our sponsor today is, of course, Nativia Banking. You can learn more about them by going to nativia.com/banking. But here's the key you got to understand. When you're on the, acquiring side, like all of us are, right? And we're selling payment processing, we look at interchange as an expense.
Right.
Which it is. It's taken away from our residuals. But guess what? That interchange is somebody's income. Guess who's making income on that interchange? It's the bank.
So issuing the card.
Issuing the card. Why don't you become the bank right? And work with Nativia Banking to offer banking services to your business clients. So they would be using their Nativia business debit card, just like I was.
Right.
They would be getting cashback rewards. You would be making residual income. So again, head over to nativia.com/banking and check it out. So for those of you that are watching, you'll notice that, at least myself, I don't remember with Patti, but I'm wearing the same thing I wore for the last episode. And the reason is because we've recorded them in the same day. So we do that
And
sometimes.
I didn't change between
All right.
because there wasn't enough time, really.
There you go. Well, what's interesting is today, while recording these episodes, right before we recorded, Patti, I was over at a local restaurant selling them a point of sale system. So not something that I do very often, but I'm working on a little video that I'm going to put out on selling a restaurant on point of sale. So I had this interesting conversation, and I just had to share it because I thought it was so cool, and I thought it was so relevant to our audience. So I'm talking to this company. It's a restaurant, a fairly large restaurant, and they have like an event center, and they have a bar, and then they have the restaurant. So they have these kind of 3 different venues.
Right.
And their point of sale system is very old. It's like 9 years old. I won't say who it's with to, not to be
Well, who was around
negative.
9 years ago?
All right.
We can remember that far back.
Yeah. So anyway, though, but here's what's interesting about it. They actually have another, they own another restaurant in the local area that I frequent often as well. And at that one, they already had upgraded their system again to a provider that's much more modern. I won't say who. And I was talking today to the dad and son. So they run these businesses kind of together. The son's kind of the CEO. The dad's like CEO emeritus, I guess is the best way to put it. And, we were talking about dual pricing.
Okay.
And it was such an interesting conversation. So when I was talking to the son, and the dad kind of chimes in, and so we're just talking about it. I'm like, well, what do you think about that? Because the system I was going to install, obviously I'm, me, so I'm pitching dual pricing. And they're like, yeah, they said, we already did that at our other location with the other provider. They were able to eliminate the processing fees. And he said that saved us an average of $8,000 a month.
Wow.
Like, that is huge.
Wow. Yeah.
And I said, oh, that's awesome. I said, have you seen any change? And he said, actually, he said, we've had a slight uptick in the number of people that pay with cash. Right.
Okay.
But he said the overall revenue has grown significantly even since we implemented the program. And so when I pitched him on this other location and said, hey, let's do that right here. And he said, well, here we only spend about $2,000 a month on fees. And, I said, okay, so do you want to save $24,000 a year? And he's like, you betcha I do, so,
right.
But just having this conversation, it was so interesting to me. And even as the son kind of chimed in and was talking about how he said, yeah, I feel like this location here is one of the only holdouts in the area where we're not passing the cost of processing, to our customers. And it was just such an interesting conversation. And it just reminded me again of how ingrained this concept is in certain markets like mine, because of people like me and others, right?
Right.
Where, everybody in this area has just been sold on this idea already. Customers are super familiar with it. And there is no way you're going to get these business owners to go back on that. And so I think it's going to be very interesting for Visa to, continue this push for transparency and all that. But I just foresee that this is a market trend that is really ingrained in certain areas. Now, at the same time, I'm consulting with an ISO that's out in the San Jose, California area. And that's a market where it just almost doesn't even exist out there hardly,
Well, here where I am, it does not exist. I mean, it's amazing. I've thought about going out and just pitching it for the heck of it, but it's like,
nobody does
doing it.
Yeah, and it's so strange, the areas like that. And then you have areas like mine where it's just kind of everybody does this. And even in very, varying degrees of compliance, like I talked about in the last one about the pizza shop that had, did I say that? I don't think I said that on the last episode, that sign that I saw. I think I was telling you about that.
Yeah, that's right. You were telling me.
Yeah.
You didn't tell. You should tell our audience about that. That was like blew me away. But...
Yeah. So a few days ago, I was at a local pizzeria that I actually tried to sell like probably, 10 years ago, and I wasn't successful with that one.
Yeah. My aside is there's a pizza place in Altoona that James hasn't sold. But...
Yeah, I know, right? That's news right there. But at any rate, so the sign on the window was the most non-compliant sign I've ever seen. The sign on the window said a convenience fee of 4% is added to all credit and debit card transactions. This is in addition to the regular price. I was like,
Like,
wow,
what?
man, you literally hit every possible wrong note you could hit. I mean, it's like a convenience fee. No, it's not a convenience fee. That's a different thing. It's added to credit and debit. You can't add it to debit. It's 4%. The cap is 3% if you're going to do a
Right,
surcharge. And it said that it's in addition to the regular price. So you just
right.
wipe that
Just
any
like so off
possible.
the
It's
wall,
definitely
right?
not cash discounting or anything else. I mean, it's not even a non-cash adjustment. It's just a fee. It's a surcharge. So, in varying degrees, but it's like that kind of just goes to show like that sign in our area probably hasn't hurt that business at all
No,
because
because everybody's doing it, right?
everybody's so used to this idea anyway that they just don't care.
Yeah,
And so now if they get a Visa mystery shopper in there, they're going to have an interesting time of
right.
it. But yeah, so the thing I really wanted to report on today was this. Dual pricing, differential pricing. This is a concept that is here to stay in certain markets. And as a result of that, I think it's going to be very difficult to ever kind of reverse this trend. I think it's just something that's going to evolve over time, but I don't think we're, the guys I talked to today, in order to get them to start paying credit card processing fees again, I mean, Visa is going to have to, charge them 20 grand or something. And even then they're going to be like, taking them to court. I mean, there's a lot of merchants out there right now
I've been saying this all along. This is,
their thing.
if they try to press this, they're just asking to be taken to court.
Yep. So that's my thought. We'll see how it plays out.
So the Consumer Financial Protection Bureau, we love talking about these guys. They think
it's a
that
fun
big
bunch over
tech.
there,
I'm sorry.
I said it's a fun bunch over there.
Oh, they're fun, I mean, especially even saying their name is like.
It's like, could they really not have come up with a better name than that? But
Yeah,
anyway.
could they not?
Yeah.
But that's Washington for you.
Yeah. Well,
Anyway,
right.
the federal consumer watchdog, as I like to call it, thinks big tech has too much sway in the mobile payments market, and they do. I mean,
Yeah. No secret there. Yeah. So
Yeah,
we're talking
so
about Apple Pay and Google Wallet. I mean, that pretty much controls the mobile payments. I mean, pretty much, so.
Right. And, CFPB Director Rohit Chopra spoke to this at the Federal Reserve Bank of Philadelphia's annual FinTech conference, which was in early September.
Okay.
It happened to coincide with the Bureau's release of findings from its review of information collected. Remember back in 2021, asked all the high-tech companies to provide information on their payment activities and other things in the financial sector.
Right.
It's in his speech, as you just said, he spoke of the outsized influence of Apple and Google that they exert over contactless payments. Consumer usage of tap-to-go options in their smartphones has grown exponentially, really, in recent years, largely due to COVID. It apparently, from the data that I collected, about $300 billion ran across Apple Pay, Samsung Pay, and Google Pay last year.
Okay, 300 billion. I mean, what's the total market? Like, is that?
Well, for mobile, I don't know, but I mean, total market for credit cards is like 3 trillion.
Well, that's what I was gonna say. I was like,
Yeah.
okay, that's
So
yeah, but I guess I mean 300 billion though, and is that US only?
Yes. Yeah,
okay. Oh, that's a lot. I mean, yeah, 300 billion. That's a ton because
when you think about
like what percentage of total GDP is coming across with cards,
Right.
With mobile payments, it can be much more than that.
Yeah. So Visa has data that says 1 in 3 Americans are now using tap to pay. I have to admit, I get like irritated if I have to dip my card anymore.
Yeah,
that's a 700% increase over 2020.
Wow.
And MasterCard estimates that contactless payments account for over 60% of its network activity globally. So these are just some data points to show you how big mobile is, if we hadn't thought so already, and why the government's a little concerned.
Yeah.
It takes issues with rules that restrict access to competing mobile wallets. In other words, you can't load an Android wallet onto an Apple phone.
Right.
There's not Android. Google doesn't have a similar prohibition right now, but as Chopra put it, that doesn't mean they can't do it sometime in the future.
Right.
So he says restrictions on the use of tap to pay reduce consumer choice and inhibit progress towards a more robust open banking system. And of course, we know about open banking, which makes it possible for consumers to share their information among providers.
Yep.
And it said that CFPB said in a statement that it is evaluating the existing retail payments landscape to understand how regulatory changes within that arena might help or hinder the transition to open banking.
Wow.
So, they're definitely, they've been, during the last administration, they were pretty much pushed to the side, but they're clearly been amping up in this administration. And frankly, if they're going to go after big tech, it could be worse.
Yeah. One thing I will say that it's maybe a little bit off, but just kind of where my mind always goes with this stuff is, there's this common theme in my mind of the risk that we have of, wallet share. I really feel like, it's so funny we're having this conversation because right before we recorded this, I had a meeting with the CEO of CC Storage, so one of the companies that I own that is like an ISV. And he was talking about how urgent it is for them to develop, like right now, when somebody signs up to rent a storage unit with one of our clients that's using our software, they can't pay with Apple Pay on their phone. They have to actually like type in their credit card number, and they can do the picture, to take the picture of it. And then, but, and it was funny because we were both talking about it and he's like, how do you feel about, and I said, if I go to a website and they want me to key my number in, I don't have Apple Pay, I'm out. And he's like, I'm the same way, and so it's crazy that we've gotten to this point where it's like, as an ISV, as more of a, that side of the market, right? We're like, well, we got to reach out to Tild, which is our, processor there. And we got to find out how do we leverage the gateway, API to get Apple Pay on, like that's crucial. And so, the mobile payment stuff is crucial because, if you're out there building a portfolio, the question isn't just how many merchants am I losing? What's my attrition of merchants? The question is, are your merchants using, shop.com or one of these other solutions to sell their stuff online? Are they using DoorDash for delivery? Are they using Uber Eats? Are they using Groupon? And all of a sudden it's like, well, this merchant does, it's like they're doing 100,000 a month in revenue and they're processing 40,000 in card.
Right.
And that's where you start to, and I feel like our industry as a whole, we just don't ever talk about that. Nobody really ever talks
share
about
of that pie. It's more than a wallet. I always think of wallet share as sort of the individual. Okay. Okay, the bank cards have this much wallet share, cash has that much wallet share.
Yes, I like that. Okay. Yeah, that's a good way to look at it.
And but I think this is a pie, right?
Yeah,
it's a pie that's been getting bigger over the years, but
what's our cut?
It used to be that mobile had a very thin slice of that pie.
Right.
And its slice is getting bigger and the brick and mortar plastic card piece is getting smaller. Kind of reminds me of Christmas at my house when I was at my family house when I was growing up, As you got older, you got bigger pieces of mom's pie. And
there you go.
As mom got older, she took smaller pieces of pie.
Yeah. And that's what's happening in our industry right now is we're kind of, there's certain pieces of that pie that are getting smaller and pieces that are getting bigger. And I think what's scary is most of our audience, if they're honest, they're probably focusing on areas where the pieces of pie are getting smaller, meaning brick and mortar, physical location, card present transactions. That piece of the pie is getting measurably smaller. That is a fact. And then they're ignoring areas where it's growing, which is card not present, e-commerce, mobile payments, meaning not just mobile payments at the terminal, but mobile payments online through, those e-commerce type solutions and SaaS solutions, ISVs, that world. So I think it's like, you got to be thinking about that world because that's where the growth is at. Right. And of course you want to protect what you've got, but you've got to understand that those pieces of pie are going to get smaller over time, unless you come to those merchants with a full suite of solutions that allows them to do the delivery stuff under their own brand and using your processing, and it allows them to do the online store with their own, with your processing. Right. So I think that's the key.
And they can do that. There's ways.
Yeah. Absolutely.
Yeah.
They go back and listen to our podcast episodes.
That's what I was just going to say.
We've had somebody on that does all of that. So yeah. Good stuff, Patti. Thanks so much.
Thanks, James.
Yep.